Okay, great. Shailesh, should we get started? I think we've got, and I see InvestorAi, which is Prabal from our team, giving everyone a big welcome on the chat. So let's just get started. So welcome everyone, and absolutely delighted to do this new type of webinar format that we're trying, more in terms of a time. Midweek, we just thought, between Wednesday, Thursday, you're going to see some different invites from us to see what works for all of you, assuming some of you have just finished work or at work, but logged in to see us. So a very warm welcome from the InvestorAi Academy. I'm Shruti Bopaya, and I have with me today Shailesh Sridhar. He's our, what can we say about Shailesh? He's really the man behind everything that you see in InvestorAi, he and his team. But welcome, Shailesh, and we're absolutely delighted to have you here today. He's going to be talking about active trading and how you can master it. So the chat is open, and we will take questions. And we'd love for you to, keep talking to us through this session over the chat. But over to you, Shailesh, and we're all waiting to learn from you. Over to you, Shailesh.
Sure. Thank you, Shruti. So actually, this is actually the third time we are doing this. Actually, this is a more advanced version of what we started as Get Set Go. So I want to, I've been trading since 2007, so it's almost 15 years. And I just wanted to impart what I have learned and what others have taught me over time, and just pass it on to others. And, maybe hopefully it comes to use for you when you either start trading or start investing, or actually a combination of both, which is what a lot of people do. So as part of today, this is what we would be covering, where we speak about how there are different types of companies, what sort of trading and investments can you do, a little bit on taxation, a little bit on how there are some do's and don'ts of trading. And then I'll speak about some fundamental and technical indicators, and then we can easily do the Q&A. So let me directly jump in. If I have to look at all the companies that are listed in the stock market, right, I could actually make them into different buckets on different criteria. So the first one I will speak about is something called a market cap or a size. So market cap is essentially how much someone says the company is worth. So Reliance is India's largest company, and there are different companies, and Amazon is the world's largest company, listed company. So how is this market cap? It's basically stock price into number of shares. In India, if any company is about 20,000 crores in market cap, it's called a large cap. And between 20,000 and 5,000 crores is mid cap, and below that is small cap. Now, why is this important? These sections, if you classify these in this way, they behave differently during different market periods. Larger companies, because they have more evolved businesses, they would be much more stabler, and they would not grow too drastically high and they won't go down too drastically either. So for example, if you look at just last year's performance, this is essentially from January 1st this year, Nifty is up 39%. However, the small cap index is up 57% in the same period. And despite losing just 8% in the last 1 month or so. And during the COVID crash that we saw in March 2020, the small cap index was down 43%, whereas the main index was just down 33%. So as I said, right, it's sort of like more volatile, more risky to get into the smaller caps, the mid caps, but that's where the returns is as well. So returns and risk are like two faces of a coin. So you get both of them essentially together. The next way to look at the entire companies is based on what sort of business do these companies do. So essentially, you can either classify a company as, you can classify them into multiple sectors, as you can see on the slide, and they are then further divided into cyclicals and defensives. So for example, defenses is IT, consumer staples, healthcare. Now, if you look at those names, why is it called defensives? Now, defenses are certain sectors which do not get impacted by day-to-day economic cycles. Now, what do I mean? For example, let's take consumer staples, right? Maybe it's HUL or it's Dabur. Now, if there is a recession and you will not stop using soap or you'll not stop eating food. Their businesses will always be stable over time. It will not grow too crazily, but they will not drop too. So their earnings, their sales will be much more mature. And that's why they're called defensives. So the general idea is whenever markets are sort of crashing, you try to get into defensives and hold there because they will crash lesser as well. And cyclicals, if you see something like materials, where it is Tata Steel or energy, where it is ONGC, which is, they have a lot of correlation with some market element. For example, Tata Steel is impacted by the steel prices, and then so these guys are cyclical in nature. So what happens in a business? There's business cycles. So there'll be up cycles, there'll be down cycles, and during those times the stocks will move. And that's why this information is there. Now, why do you need to know this? Whenever someone is constructing any sort of a portfolio, and you'll hear this word a lot, and it's called diversification. What does diversification mean is you are not exposed to one single factor too much. What do I mean by that? Not just investing all your money in Infosys, TCS, Wipro. If you are then exposed to information technology, so if tomorrow rupee US dollar prices go, rupee strengthens, then essentially all these IT companies will go down. So you're exposed to unrest. So you ideally need to split your money across sectors and across cyclicals and defensives so that you have a balanced portfolio over time. Okay. And again, among these companies itself, you can't really compare one another. Now, what do I mean? Let's take two examples. One is Tata Steel and one is HDFC Bank. Now, Tata Steel, in the last 2 quarters alone, they reported a profit of close to 15,000 crore. Now, HDFC Bank does not make so much money in just 2 quarters. However, HDFC Bank is almost 5 times the size of Tata Steel in terms of market cap. So it all depends on what sort of sector it is, what sort of business. You can't just compare one company with the another unless it's in the same sector. So whenever you're doing analysis, try to see which sector it is and how is that sector headwinds performing before you make an investment decision. Now, I'll try to break down. The next way of breaking down by companies is by style. There's value, growth, and dividend. Now, what does value mean? Value means companies that have really good fundamental values. And fundamental values is actually price equity or price to book. Essentially, it's sort of cheap compared to its historical valuation. Now, just because it's cheap doesn't mean it's near its, it will go near its fair value. It might take some time to get there. The next thing is growth. Now, what do I mean by growth? These companies would already be expensive. Essentially, they would have higher ratios. However, their earnings and sales growth over the next 2-3 years is expected to be a lot higher. For example, the easiest example is Zomato. Now, you see Zomato listed itself at a very high PE. Almost to the point that looking at PE makes no sense because they're not even making profits, right? So if you start evaluating all these companies based on, hey, I'll do PE ratio, PB ratio, all these companies you will never pick, but that doesn't mean you don't invest in them. That's a different style of investing itself. Okay. Next is dividend. Now, a lot of people invest in the company so that they get dividends regularly from company. From people who don't know, dividend is like getting interest on your bank deposit. It's just for shares. However, it's not fixed and it's basically whatever the company decides. And you normally have a lot of stable and mature companies that give dividends out. And that is normally seen as it's sort of seen sometimes as value, but it's essentially a much more less riskier investment. And of course, when you take less risk, be ready for making less returns as well in bull markets, right? Finally, I want to just give a view on ETFs. ETFs are like mutual funds. It's just that they are traded in the markets every day, like throughout the day, and it acts like an equity security itself, but it actually replicates the thing. So it's the easiest way to gain exposure to the market. So if you're literally starting out and you just want the index return, and if you think the market's not doing well, it's not a good time to pick stocks, or you're managing an active portfolio, right? And you think, okay, I'll not be able to look at the market for the next 6 months, but I want to be in the markets. The best way is to put money in ETFs. So it will be with the market, whatever market gives, it will give you the nifty main benchmark returns, and you can just be there. Now, let me move on to styles of trading and investments. And before that, I want to speak a little bit about the different instruments that you have in the market. Now, most people, when they speak about trading and investing, they're speaking about the cash market or the direct investing. The direct investing is where you basically literally buy the shares of the company. And the way you need to do it on a holding basis is you literally need to bring the cash up front and make the trade purchase, and it comes to your demat account and the purchase is done and you hold on forever. And then once you're in profit, you can sell. I'll also give a slight overview on derivatives. Now, what derivatives are, as the name suggests, is essentially securities that derive its price. Okay, the price of the security itself, the security is dependent on the underlying. For example, Reliance Future. Okay, now futures is one derivatives, and Reliance Future, that price is derived from the Reliance underlying stock price. So if Reliance stock price is 2000, and Reliance Future will also be around 2000. There's also something called options, and there's put options and call options. Essentially, you can further take, you can pay a premium and take position. And if the stock goes above a certain level, you'll actually make a lot more money. And if it goes down below a certain level and you had a put option, you had bought it, you can actually make money even if it goes down. Now, why are we bringing this up? Because that's where, as you grow and mature as an investor, and you have a lot of capital in, you'll actually start thinking about hedging, you'll start thinking about margin, and that's where futures and options come in. Of course, margin means risk as well. So it could easily go a lot haywire. Another reason of futures is you can actually go short in futures. What do I mean by that? If there is any stock and you believe that stock is too overvalued and I actually want to sell it, like you want to go short it, you can actually go short in the futures market. You can't go short in the cash market. So essentially, what does going short mean? You think the stock is at 2000, you believe it should have been at 1500. So you actually go short at 2000. And then once it falls to 1500, you can buy it back. So you can make that difference of 500 rupees as gain. So either you buy and sell or you sell and buy. That's essentially, the second one is essentially shorting. The other thing is Reliance 250 shares. If you buy for 2,500 rupees each in the cash market, it will cost you 6.25 lakhs because that's the entire exposure. However, if you're taking the same exposure in a futures market, you just need to pay 1.3 lakhs as margin. That's it. And your gains will be literally how much you would have made if it was a stock position, the cash position itself. And of course, as I said, and this needs to be said again and again, options, F&O, futures and options bring a lot of margin since they're highly levered. So you're actually investing money that you don't have. It is easily possible that you lose more than your margin and you can lose a lot of money. So be careful and understand the risk before going on. Now moving on to styles of trading or investing. Now, this is a combination of philosophy, like how you perceive stocks, and the time period. It also depends on how much time you can devote into the stock market. For example, someone's maybe retired or they like to do full-time trading, they can actually go much more into any sort of trading. Now, if you're in a full-time job, you will probably do momentum, but doing intraday might be too hard for you. So let me speak about the different types. The first one is long-term investments, and it could either be growth or value. I've already explained what value is. And in today's companies, there is a lot of growth companies that are getting listed. In the last 2 weeks itself, you've got Policy Bazaar, you've got Nykaa, you've got Paytm, and it is harder and harder to actually evaluate these companies. I mean, these companies are almost, most of them are making losses. They're barely making money. It doesn't mean that it will go down. It's just that the business model is complex and there's a lot more research needs to be done before you arrive at, hey, is this a good price to enter into or not? And of course, just because a stock is cheap, a value investing stock doesn't mean it will continue to, it will bounce back. It can continue cheap for a longer period of time. Now, when you go into short-term trading, you normally do it either reading through technical patterns or you start looking at announcements, RBI announcements, company results announcements. You actually think, okay, you know what? I see you actually look at, you go to your auto showroom and Maruti has hiked car prices. And when the results is just about to come, you'll probably see, hey, today Maruti results have come. I know they have hiked prices, so maybe they'll make better profits. So, you start building views like this on the stock before trading. So that's essentially on announcements and heuristics. Now, speaking about the different types of short-term trading, there's momentum, where you pick securities that have started to go up already, and you believe there's a even further movement coming along. That's essentially what momentum is. Now, swing is essentially securities that have either oversold, like essentially they have come down or they have underperformed for some time in the recent history, and the selling seems to be over. So it might bounce from here. So it's more of a reversal trade. And intraday, as the name suggests, you buy and sell on the same day, and it's even more technical, or you look at news and you try to trade in that. As part of InvestorAi, we believe in having algorithms for all of them. So long-term investing is covered by the value investing section. Alpha 330 covers momentum, and then you have swing and technical section for intraday and very, very short-term trading as well. The thing is, the more shorter you get into, the more effort you need to put in to monitor the stock. For example, if you're doing an intraday trader, you need to be, I think, at least see the screen at least once every 30 minutes. And that's why it requires that effort and commitment to do it, or else you will just end up having positions, and it might trigger stop losses if you don't have it, you might even be looking at bigger losses. So now let me just move on to taxation. This is an important thing because a lot of your gains you will end up paying as taxes if you don't trade properly. And I have actually broken it down to short-term, long-term, and F&O as well. So it is important on how much you hold the investment for. The government, like most governments in the world, want you to be an investor and not a trader. Because the investor you are, it believes it brings stability. And that's why for you to be more of an investor, if you see up to 1 lakh rupees, there is no long-term capital gains tax at all. Only above 1 lakh, it's just 10%. However, if you look at short-term or speculative or options and futures and options, you're going to be taxed at a higher rate. So be careful. And whenever, if you're trying to sell a long-term investment, keep looking out for the 1 year time. And with the new tax rules coming out, actually, there is a new statement that automatically computes your tax and all. So try to ensure that you book the right amount of long-term capital gains tax and try to avoid tax, because over longer periods of time, this could be a huge amount. Right. Next, I'll just move on to a little bit of trading do's and don'ts. I'll first speak about the order book. Whenever you start trading, whenever you log into your broker and you put money in, you need to buy or sell. And there's obviously those big blue and red buttons there. But there are 2 types of orders, and that's not something you need to see and understand. So now if you look at the order book, on the left side are literally all the buyers. So think of the order book as like a market, right? And there are sellers in one side and buyers in one side. And if you look at the buyers, there's buyers at 1,055, 54, 53, and sellers are at 55, 56. Every time these two intertwine, the trade happens. That's where the stock price trade happens. So whenever you're placing orders, there are 2 ways to place orders. One is called market order, or one is called a limit order. Now, if you place a limit order, you can literally specify the price you want to buy, and you can put that price in and it will get executed at that price. So if I put at 154.1, so it will go, and once the stock comes to 1054.1, my shares will be bought. However, if I put a market price and I say buy 20 shares, then it immediately go and buy the shares at 1055.45. Now, why am I bringing this up? When you start going into smaller value securities, right? For example, the securities just priced at 20 rupees or 30 rupees, or if you go to options, even 20, 30 paisa can become a huge impact on your trading and investment as well. So be careful when you place orders. The next thing I want to speak about is circuit. So essentially, other than the F&O securities, the exchange stipulates that a stock cannot move more than, for example, 10% or up and down above that limit. Be very careful about this, especially if you're going short, because if a security goes and hits a circuit and if you're stuck in short, then you may not even be able to cover it. For example, one of the securities was called 3i Infotech. last 5 days, each day it was up 5%. If you had short it on 5 days ago, there was no way you could have bought it back. So you couldn't even book loss. Okay, I've lost 5%. You can't even do it. And there will be penalties and also be careful about that. And circuits today, we've got a very big example, Paytm. It got listed and it closed down 26% from its issue price. So a lot of retail investors lost a lot of money today. And at the end, at 3 o'clock, it hit lower circuit. What does lower circuit mean? There are only sellers and no buyers. So even if you want to sell, you can't exit. So that's what had happened in Paytm today. Okay. And that brings us to something called stop loss. So whenever you're trading, if you think you can't give time, you can't see what is happening on real-time basis, and so you can just put a stop loss order. So if it hits that level, it will exit and you can actually lose a lesser money than what you thought of. The opposite or almost the same way is actually good till trade orders. Essentially, if you put in an order, it will actually stay throughout the period of time. So for example, you bought a stock at 100, you think it will go to 110. You can put a sell order at 110 with GTT as it is called. And the day 110 it comes, the stock price will be there, it will actually get sold. So these are some new things that have come just in the last 3-4 years, which is actually really good for long-term investors and for people who do not trade on an intraday basis. Okay. And I've also spoken about news and results. So whenever you're looking at buying a stock or even selling it, just try to look and see at events. So if there's any results announcement, any news coming out, because suddenly there would be a wave coming and that almost brings in volatility. So you think a stock is supposed to go up and suddenly results come out and the results are bad, then it will again, it's just one more factor of volatility is brought in. Okay. Now let me move on to the fundamentals and technical side of it. As I said, to assess various types of traders and investors, InvestorAi brings the fundamentals and technical modules in the app. Now, these act as a scanner for the entire universe and picks securities that meet some certain predefined criteria across both bullish and bearish. So what does that mean? For fundamentals, we have bullish and bearish, and for technicals, again, bullish and bearish. So there are these predefined indicators. There's about 55 of them. And based on that, every morning by about 9 o'clock, the app is updated for those securities. So you can actually see for example, you think, okay, I want to look at stocks that are trading below book value. You can just go to this section of the app and check it. And I'm just going to share my screen on that and show it over right now itself. Yeah, so I think I believe the screen is now visible. So let me go to technicals first. So if you look at the technicals, there's something called bearish signals and there's something called bullish signals. So let me just look at bullish signals. It says RSI oversold and now reversing, spike with volume, cross 52-week high. There's moving averages, there's candlestick patterns, there's a whole bunch. And if you have anything in mind, please do write to us at support@bridgeweave.com. We would love to include more indicators if you want. So let me just click on RSI oversold. RSI is a technical indicator which essentially tells you if something is oversold or bought. So if the stock has been continuously going down for 4 or 5 days, it will normally have RSI oversold. And if it's reversing, then we can actually see that maybe the selling is over and try to buy it back. So let me just click on technology. So you can see, okay, Tata Communications. So this came today morning. So you can see inside price, you can see the last time this happened in this security, how are the returns? And if you click on the link, it actually opens up, it shows you some stock analysis before you can enter. And let me just click on the live info button. Live info is linked to Google. And if you could see, the stock has actually gone up today, despite the market being down almost 1%. So of course, technical indicators do not work all the time. They're just indicators, but obviously there's a lot of people, and the more you mature as a trader, you can start using them even more deeply. Now, let me move on to fundamentals. Same thing like how you saw technicals, whereas you can either see bullish signals or bearish signals. Bearish signals are essentially, you probably already own these securities, but maybe, for example, declining operating margins. The stock's margins, operating margins is essentially profit over sales. They're probably going down, gross profit over sales. And maybe something like high PE ratio among its peers, and that's important. So among its sector itself, the security is highly priced. And let me go to bullish signals. It actually shows you consecutive upgrades by analysts. So all these brokerage houses, they're getting more and more positive on the security. So maybe you might be interested in it. And as I was saying before, stocks trading below book value. So let me just take India. Let me take financial banks. Okay, next. One of my favorite banks, because my father worked there for 41 years, is Canara Bank. Now it's trading below book value as well. So it's saying maybe you can get into it. Of course, there is no single indicator that will help you to make a decision. The entire reason of why we are doing this presentation today, this specific topic, is Akshay, if you've seen all the previous webinars, always speaks about you plus AI. So it's essentially you, your own research plus the AI part, which InvestorAi is trying to bring you. Now, we wanted to concentrate more on the you part of how you can do the research. And that's why we will try to do it. I think I've come to the end of my presentation and would love to hear from all of you, your questions, your thoughts.
Lots of questions, Shailesh. And listen, Shailesh, thank you, because, every time, I make notes and I actually end up learning so much. So thank you. There are definitely 2-3 things I have to watch out for, but let me start with, a couple of questions that actually came in. I'm going to actually start with, jump into one, which is a question even I've always thought about as well. So Himanshu asks us, when you were doing the dividend slide, is dividends in proportion to bank deposit rates?
No. What happens, this depends on, so what is dividend, right? Company makes profit. It doesn't know where to invest. Okay. Instead of just keeping it lying, they will pass it back to investors. Okay. Now, companies that make more profits compared to their market cap will actually give you a higher dividend. Now, if you go for some companies like Infosys, TCS, who make sufficient amount of money, but their market cap is also very big. So the dividend percentage will just be 1 or 2%. However, if you go to like these PSU companies, Coal India, RAC, there the dividend percentage would be 5%, 6%. Now remember, dividend is not forced to be given. I mean, there's no rule on the company that they have to give. It's their complete choice to do it. But keeping that in mind, you can actually look at securities with dividend. There is one of the fundamental indicators as well, which look at dividend companies with good revenue growth. So essentially dividend paying out companies who have good sales growth. So you can maybe even look at that. That will also give you a lot of dividend companies as well.
Okay, on that note, I'm just also going to jump straight into a question about, stocks in InvestorAi, and Nakul Shukla's latest question that's just come in is, he asks, there are certain stocks I try to search for to see AI analysis. I don't see them in search results. For example, Make Money Organics.
Yeah. So our general threshold is to have at least 1,200, 1,300 crores as market cap. Plus, our algorithms depend on 35 raw data points, and about 700 features are computed across the app every single day. Now, to do that, we need good quality data and data available. Now, what do I mean by that? Analyst data. So whether it is Angel Broking or Goldman Sachs or HDFC Bank, all these guys have a securities division who actually give these research reports. Right? Whenever you open CNBC, you see this broker upgraded target 780 rupees. This broker said it is a buy. Macquarie yesterday came out and said Paytm is a sell. They were the first broker to cover Paytm. So we need that data, because based on their data and underlying data, we can actually see how much the company might grow. So for example, Reliance is actually tracked by 30 brokers. So we take all their data and try to see what is the street view. So unless we have that data, we can't include. Now, Make Money was actually our best value investing insight this year. So we had it before the demerger thing, and before demerger it was one entity, right? And that time that security we had recommended at 75 and it had gone to 155. So in just about 3 months, it had given 100% returns. After that, what happened? The stock had a demerger and they split it into two companies. And for one of the companies, the analyst data is yet to come. So we are just waiting for it. And once those come in, we generally try to put it in. For example, Zomato and all, once they got listed, it normally takes about a month and a half for the analyst to start tracking it. So now, right now, if you see, Zomato is available in the app. But however, for Nykaa, Paytm, Policy Bazaar, who all got listed in the last 2 weeks, you will have to wait till about December. That's when all the data starts to come in, and then we update the app. So right now, about 600 Indian companies are there, and another 5,000 global companies is what we track every single day, and the signals are generated across.
Okay, a couple of questions in a particular area. So Jaswinder asks, what points should we look at when we look at tips for call and put?
The biggest mistake people make in options is completely not understanding theta and volatility. What do I mean? A call you buy is for you to hoping that it goes up, right? Now, even if it doesn't go up, and if it's coming near maturity, you will actually start losing value. So, and again, same thing on volatility as well. If the volatility starts going down, the option prices start to go down. For you to analyze call and put, there is never been a trade for too long, especially options. If you're looking at stock options, there's a monthly expiry, and try to see if the move that you're expecting needs to happen fast, or else the theta will just kill all your profits. Even if the stock goes up, you may not end up making money. So that is the first thing I would say. But then there's option chain analysis, OI analysis, and open interest analysis. And of course, at the end of the day, any option derives its price from the underlying, which is that particular stock or index itself. So your view on that would be very important.
So Yogesh asks, I always buy limit, but by the next day it shows some additional paise. What should he do?
Maybe you're looking at the trading or the contract note, maybe. So what happens? Of course, a lot of the trades nowadays are zero brokerage for delivery. However, there is costs involved in trading, as I said in my first webinar on Get Set Go. So you will have, though you may not have brokerage, you will have exchange levy, you will have STT, and you will also have DP charges. So my understanding is those charges, so your broker, wherever you're seeing it, is actually including every cost of the transaction and then showing you the average cost of the investment. So that's why it would be slightly higher.
Okay. So Ketan asks, how do we calculate instruct value of the stock?
Maybe you are referring to intrinsic value. There are multiple ways. That's what investment bankers do all day. Either there is something called the discount cash flow method. Essentially, you think how much money profits the company can make into the next 20, 30 years, and you use a discounting rate and derive what is the stock price that should be there today. Or there's something called peer analysis, where essentially you see, okay, I have Infosys, TCS at this level. Wipro, which is also doing the similar business, has to be in the same P multiple because it's similar margins and similar revenue growth. So based on that, you can arrive. So there's multiple ways you can arrive at intrinsic value.
Okay. Back to some questions on algos and how our app works. So GV wants to know, wants more information on our algos and how it works. And similarly, Nakul wants to also understand, how does this whole AI engine work?
Correct. I've already spoken about fundamentals and technicals, which are more like a scanner. I'll speak about the biggest section in our app. I mean, at least by user time spent, is actually play. So it's a 6 multi-factor. So essentially each stock is evaluated on 6 parameters and scored on them. And that is one section of that. And the pure algorithms, which is essentially looking into stock suggestions, is value investing, Alpha 330, and Swing. Now, value investing, all three of them are based on artificial intelligence or machine learning, as it is really called. So essentially, we take a lot of data. We see how securities are performed historically in the past, and our machines learn from the patterns, the features at that point of time, and try to derive which securities will do well in the future. So it's all machine traded. So value investing is based on historical cheapness of the stock compared to the index. So if it was expensive previously and now it is cheap, then it might flag that security. Of course, there's a lot more details, and you can go to our YouTube channel to look at all the videos where we have done each of these algos specifically and covered them in webinars and explain what they do. Alpha 330 is a pure momentum algo which is designed to give 3% in 30 days. So as soon as it gives 3% from the day it is recommended, you can actually exit or book profits. We have been historically accurate about 73-74% of the time. Swing trading is essentially, as I said, it sort of crashes in history. Maybe it's now bottoming out. Maybe it can bounce. And swing trading is designed to give 2% in the 3 days. There's both long and short ideas in swing. Short ideas are a little less, but that's how swing works. So these are the three main recommendation algorithms, supported by play, technicals, fundamentals, and quarterly results, which basically helps you make more research on your own.
And of course, at any point, if they want to see live info about the stock, then you can just click on that and get live info. Because you've been speaking about the days and how our algos work on certain days. I'm not sure if it's a connected question, but Arul asks, can you add 5 days or 10 DMA crossing above 50 days or 100 days DMA?
Absolutely, we can. Maybe we can just take this down. The only thing we do is when we get indicators like this, we actually sort of test them. Of course, no indicator is 100%, right? I mean, you can have something oversold and it can even go down more. But definitely, if there's at least a reasonable working that, okay, the DMAs are working. We already use the 200 DMA because it's a long-term average and a lot of people follow it. But yes, there are people who use DMAs with RSIs and MFIs to predict stocks. We'll definitely take a look into this. Thank you, Arul.
Arul, thank you. Arul has another one, but he's sort of going towards small case and FTM. So I'm going to come back to that question, Arul. But I want to take Vasu's question. He actually wants to know any preferred indicators to look at for long-term investing.
Okay. And of course, as I said at the beginning, it's all about philosophy, right? There's value or growth philosophy, and some people will buy anything. I personally am not a growth investor. What do I mean by that? I'll never put money in Zomato, Paytm, and I've never put in either. I don't care if they give 100% returns. I'm not putting money in it because that's just what I believe in. I believe in value investing. So if you're doing value investing, you first look at how much leverage they are, how much debt they are. You look at how valued they are. Obviously, that should have been what I should have said that first, because how cheap they are is very important compared to their peers. The earnings should be stable or growing. So essentially, year on year, if you look at them, the earnings should be growing. Then I also look at how the company management speaks. I mean, there's nothing good to do, but as long as they don't do anything bad, it's okay. Now you have these companies, one major steel player, they tried to sell a subsidiary worth 6,000 crore to just 2,000 crores to their related party. All sort of these drama and all these companies do, try to stay away from them. And just pick clean balances, clean businesses, understand the business of what the company does. And because long-term investment, I would always presume that you would put a significant amount of money in it and actually hold it over cycles, right? So that's one way. I think those are the indicators that I look at.
So before I come to the FTM question, Nakul, thank you so much for your comment. So Nakul actually wants to speak in the session now, but Nakul, I know it's a long message that you've typed. We will bring you in as someone who can, give like a customer point of view in the next one, but I'm going to read what he says, Shailesh. He says, I've been using your app for 2 to 3 months now. I absolutely love the accuracy of Alpha 330 equity. anyway, would love to speak in the session about my question, but it takes too much time to put it in text. Thank you. And this obviously is and Shailesh, you should talk about it, because every time we hear feedback like this, it's you and your team. So please. Great. So Shailesh, no, I was just going to say that I'm sure this is good feedback for you. I'm going to just now take Arul's question, and I think we should try and wrap this up in the next 2 to 3 minutes. Shailesh. So Arul's question was that he's planning to subscribe to small case, but for a month. And but of course he wants to assess and see how it's going to perform before he invests confidently. So he wants to know, are you going to churn the small case portfolio heavily?
Yeah.
If so, will I be hooked to market for buying and selling entire day? Can you explain how it works? A very practical question. So Shailesh, please.
Yeah. First, about the historical performance, we have been live in small case since about 20th April. And we have been at the top performance in our strategy itself, which is momentum and value. Now, momentum picks top alpha 330 signals. And the reason FTM is there is because you may not want to singly trade on securities. You can just put it, and we actually package it as a portfolio, and you actually get exposure to momentum or value. Now, as far as churn is concerned, yes, there is about 70-75% of the churn happens each time we rebalance. Now, the rebalance happens on weekends. So for momentum, it happens once every 2 weeks. So only, for example, the next rebalance is going to happen this weekend. So on the Monday morning, you log in, you place the orders, and the sell and the buy orders will get executed in one shot. Value investing is rebalanced only once in every 4 weeks. So you don't. So it's just one order, and the way the small case works, it's just one click. So it's actually 2 or 3 clicks, but it's just one single journey, and the entire purchase and sale happens immediately. So you don't have to keep logging in and work on it, but it does require a manual intervention, or else it would. There are different rules. If someone is not allowing you to manually intervene, then it is called portfolio management, and there are different rules and different regulations for it.
Okay.
Yeah. Before I forget, I'm sorry. The most important point is you still have complete control. Now, what do I mean? I give you 16 securities. You don't like one of them. You are completely free to ignore that and just buy the other 15. And same way, if I'm asking you to sell, if the algo tells you, if the small case, the portfolio FTM tells you to sell, you can choose not to. I know some investors who, when we said sell Nalco, they held on and they actually made money as well. And of course, there are reverse cases as well. But at the end of the day, it's your decision, and your, small cases actually worked as a really good product in helping users give their freedom, essentially.
And what Shailesh hasn't mentioned is out of 298 portfolios on small case, we ranked number 8 in the last 6 months performance. So Arul, to your question, just try it, buy it. Okay, so Shailesh, very quickly, I just want to talk about, we have an amazing offer. Something new has happened with our app, and all of you may have seen it. As of yesterday, we actually went live with the app is free at the moment, and what we mean is you will get insights, but you will get delayed insights. So everyone can use it. You can tell your friends and family about it, but like the Spotify model, if you do not want ads or if you want immediate insights, then there is a small premium you actually pay, which is the subscription to get insights as and when these insights are actually generated. So perhaps can we have the slide up, please? I'd just like to just show all of you what it is right now. So if you actually see, the prices have been slashed. We have a monthly at 799, quarterly 1899, and annual 7,000. But I think what you should remember is we have a discount running for 15% on monthly and quarterly, and a 20% discount on annual. Please make the most of it. It is only there for till the next 4 days, and you will get an email from us on this. how did the session go? We'd love to hear your feedback right away. So if we can have that poll up, Prabs, on how the session went. And next, we would also, in comments, if you can tell us how would you like more sessions at this time, or do you prefer Saturday? Just say Wednesday, Thursday, or Saturday, and we will understand. Or in the chat, if you can just put, we will try and accommodate that for all of you. But thank you so much. And Shailesh, absolutely amazing session. And we would love to see all of you again in our next webinar. And we will let you know when the next one is in next week. Thank you so much, and good night, and take care, and enjoy the app. See you soon. Bye.